Okay guys, rain, sleet, or snow, I am back with another crypto video. This first story here, is a story from Decrypt, and it reads, are DeFi degens in good hands? Insurance companies want to help. Soon even degens could be covered by a DeFi insurance policy that helps make them whole if they get wrecked. Distressed crypto markets might finally give DeFi insurance a chance to flourish, but only if it can overcome some headwinds. At the moment, less than 1% of all assets in the $47 billion DeFi ecosystem are covered by a policy that will help replace them after a hack or code error. That was also true last June, in the aftermath of Terra Luna's algorithmic stablecoin Terra USD losing its peg and wiping out $40 billion in the process. For the rest of the year, and arguably even now, the effects of that black swan event worked their way through the entire industry, taking down other companies. In its wake, tens of millions of dollars worth of DeFi insurance claims were filed as users tried to recoup their losses. Roughly 68% of the claims filed since June have been paid. Now that the company selling DeFi cover, the preferred term in the industry for this type of insurance, have survived their baptism by fire, they're optimistic about keeping the momentum going. DeFi cover is a catch-all term for insurance that covers blockchain-related activity. It uses the same basic principles as traditional insurance. Policyholders pay a premium and receive a payout if and when they file a claim for a covered event. Those events are where the products really depart from the traditional insurance. Stablecoins losing their peg, crypto assets being stuck on platforms, hacks, or code errors causing smart contracts to behave erratically. How quickly payouts happen can vary. For something like a stablecoin losing its peg, such as when a coin designed to hold a value of $1 suddenly drops below that mark, these tools can send payment to a policyholder as soon as it detects that the stablecoin has dropped to 5% or more below the value of its target asset. In other cases, like customer funds getting stuck on a company's platform, there's usually a 90-day waiting period before claims can be filed. For those, humans usually get involved to assess which ones are valid. Despite all the parallels, DeFi cover has to contend with the fact that the insurance industry has been highly regulated in the US since the 1940s. So even though DeFi cover looks and acts a lot like what most people would call insurance, the companies selling it, including the ones Decrypt talked to before, prefer the term DeFi cover. Since June, more than 17,000 covers have been sold, according to Open Cover. The website was launched in December by Jeremiah Smith to aggregate data from the burgeoning DeFi cover industry across the Ethereum, Polygon, Arbitrum, Optimism, BNB Smart Chain, and Avalanche networks. As of Tuesday, there were $284 million worth of total value locked in DeFi cover providers like Nexus Mutual and Insurace. That means less than 1% of the $47 billion worth of assets sitting in DeFi protocols like Aave and Lido is covered. When Open Cover first started tracking total value locked in cover providers in June, $394 million was locked in covers compared to almost $80 billion worth of assets in the DeFi ecosystem. Higher totals, but roughly the same coverage ratio. Of the 525 claims that have been submitted since then, for everything from the Axie Infinity sidechain and Binance Bridge hacks, the Mango Market Flash loan attack, or the demise of crypto companies like Celsius and FTX, roughly 68% of them resulted in a payout. It makes sense that it would take slumping prices, bankruptcy, and hacks to highlight the appeal of DeFi cover for the degen community. Degens, a crypto-specific term that refers to degenerates, thrive on high-risk trading and an obsession with crypto. And even if they don't sign up for DeFi cover policies directly, they could still find themselves with a backstop the next time they get wrecked. That's because DAO, DeFi Project, and other crypto businesses are now buying insurance themselves, Smith told Decrypt. As a user, you don't need to buy your own insurance, and as a protocol, you can make sure that all your users are protected, he said. Just organizing the whole thing that way is way easier. By doing so, the teams launching new DeFi apps can guarantee at least some portion of lost user funds can be reclaimed. That also means that there's room for very focused cover providers like Sherlock Protocol, which exclusively covers smart contracts. Smart contracts are pieces of code that execute a set of instructions in reaction to a given input, such as selling or buying a token if it reaches a certain price. To date, Sherlock has sold coverage to protocols including crypto lender Euler, staking platform Liquify, and DeFi options exchange Lyra. We only cover smart contract exploit risk. Jack Sanford, Sherlock co-founder, told Decrypt in late November. We were lucky in that we were very focused and we weren't exposed to anything. We've had no claims since inception 14 months ago. There still haven't been any claims from the 15 protocols that Sherlock covers, but there has been some exposure to the long tail contagion of the FTX bankruptcy. In December, DeFi lending platform Maple Finance announced that orthogonal trading defaulted on $31 million worth of loans issued from a lending protocol run by M11 Credit. Sherlock disclosed in a blog post that it had deposited $5 million worth of USDC in the pool in August. After FTX filed for bankruptcy on November 11th, Sherlock wanted to withdraw its funds but couldn't because of the mandatory 90-day lockup period. By the time Sherlock was able to access its USDC, it was too late and the company had lost $4 million. Sherlock is still finding its identity when it comes to its place in the ecosystem, but it's becoming clearer that Sherlock should have as little exposure to centralized entities as possible, and that Sherlock should delegate capital allocation elsewhere, potentially back to stakers themselves, the company wrote in a December 5th blog post. Since the start of the year, the company has covered 5 more protocols and launched an audit contest for Optimism on January 20th. Sanford said he's found turning smart contract audits into open competitions among blockchain security analysts for bounties to be more thorough than employing in-house teams, but it's not perfect. You can never have 100% certainty that there's not a bug in it. I don't care what contract you're looking at. If it's Uniswap's very first contract, there's always a chance that there's a bug that no one found yet, and everything gets stolen out of it, he said. Yeah, so that was a quick excerpt from that article. It's definitely an interesting concept that I've thought about for years now. It's like, eventually crypto insurance is coming down the pipeline. Like, you see many projects like Polka Cover. Well, I think they changed their name to like Cover Compare or something like that. And now obviously you have these like DeFi. Well, they're rebranding insurance and calling it DeFi Cover. These companies that are going to offer that. And when it comes to insurance, I'm still going to be on the fence about it because like most insurance companies, no matter what, their goal is never to actually pay you anything. Their goal is to just get you to keep paying money into a premium month after month after month. And then when it's time, when you actually need it, then all of a sudden they look for a bunch of reasons to not pay you or to stall for as long as possible. But again, obviously something like this, because of the inherent risk with crypto, is definitely something that's going to be needed for a lot of people, especially as crypto becomes adopted by the masses. This is something that could bring a lot of ease to people's minds. It's just the thought, or just the knowing that they could go get a policy basically to cover their insurance. Now, this article also mentioned that technically individuals don't have to get the policies themselves, like, because many of these exchanges and platforms are doing it. But I'd rather people go down the path of actually getting it themselves. Just like how with these airdrops, we're seeing a lot of these companies, like, they'll screw you over and like not put you in a position where you're in a bind and you really can't access your own funds. That to me was the biggest lesson, as far as obviously prioritizing self-custody. And I already had self-custody, but a combination of being super busy and super lazy put me, not super lazy, but just like lazy for a couple days. It put me in the position I'm in now, where the flare that I had on that was claimed through Celsius, for the time being, it's gonna be just kind of stuck in limbo. Then I gotta just wait for them and hope that they still, deliver it. Even though I had a ledger, but I didn't have the time. I didn't make the time to put it up. I mean, to claim it, to go through the process to claim it myself. But so because of that definitely makes me just not want to, do anything that has to be done through exchanges or platform. I'd rather just, if I'm gonna get the coverage for that, for a DeFi policy, I'd rather get it myself. But let me know what your thoughts are. Do you like the idea of crypto insurance? Because that's basically what it is. They're calling it DeFi cover. They're playing like a semantics game to try to avoid any like legal ramifications in America. But I mean, that's really what it is. It's just crypto insurance. Let me know what your thoughts are on that. Next story I want to get into here is it reads: Josh Hawley needles Nancy Pelosi by renaming his congressional stock trading ban after her. By renaming his congressional stock trading ban bill after her. Senator Josh Hawley is trying to taunt Nancy Pelosi by renaming a stock trading ban bill, and she deserves it. To be honest with you, all of these people deserve it. They're all criminals. His Pelosi Act is a retread of a proposal that garnered no support in the last Congress. House lawmakers recently reintroduced a bipartisan stock trading proposal with broader backing. Senator Josh Hawley took a parting shot at former Speaker Nancy Pelosi by slapping her name on the languishing congressional stock trading ban proposal that would stifle her husband's livelihood. The Preventing Elected Leaders from Owning Securities and Investments Act is a performative rewrite of the bill Hawley floated in the 117th Congress and failed to get a single co-sponsor. The only major change to the bill this session is that it has been tweaked to specifically ding the California Democrat since she stepped down from her leadership role. This is a quote from directly from Josh Hawley. It says, "Members of Congress and their spouses shouldn't be using their position to get rich on the stock market. Today, I'm reintroducing legislation to ban stock trading and ownership by members of Congress. I call it the Pelosi Act." So that's a quick excerpt of it. That's a quick excerpt of it. I definitely think something like this. I haven't like read through everything this guy is trying to push in that bill, but of course on the surface, like, that sounds like a reasonable idea. But again, no matter what, whether it's him or whether it's Pelosi, you really can't trust any of these people too much. But I definitely think that on his end, it was actually pretty clever to rename the bill after her, because not only does it put her on blast for the people that aren't even aware of all the insider trading her and her husband have done that they should be in jail for, but also like it's just good marketing. It's gonna get a lot of people's ears to perk up and wonder what is that about. But I definitely, if this bill was on the up and up, I would obviously be cool with it, because at the end of the day, Nancy Pelosi is just one person. Who knows just how many, probably all of these people within all of these politicians within Congress have a whole bunch of like insider trading that they do from private information they may get. So I wanted to, that's not crypto related, but I still feel like it's still news related when it comes to talking about a lot of corruption that's going on within the government, which is the reason why crypto has become more and more popular in the first place, and why it came to be in the first place. Next story I want to get into here is, it's also not a crypto story, but it's a money related story that, again, I think is very relevant to people that are in crypto, as well as, you know, just general people that are interested in money news. This is a story out of North Dakota. It's about their pensions, and it reads, North Dakota lawmakers weigh future of public employees' pension plan, nearly $2 billion shortfall. Several bills seek to make the fund solvent, but diverge on whether to preserve the defined benefit public pension plan or transition to a defined contribution plan for future employees. North Dakota lawmakers are weighing what to do about the state's pension plan for public employees, which faces a nearly $2 billion shortfall from full funding. Several bills seek to make the fund solvent, but diverge on whether to preserve the defined benefit public pension plan or transition to a defined contribution plan, a 401k style plan for future employees. The union that represents state employees wants to stick with the pension plan. The pension plan, as of last year, had more than 53,000 members, including more than 23,000 current employees and nearly 14,000 retirees and beneficiaries. Key players say the pension plan's sustainability is most important. I believe we need to step up, make the difficult decisions not to kick the can down the road, because we wouldn't be doing our responsibility to the public, employees, and taxpayers of the state of North Dakota, said House Majority Leader Mike LaFleur. Representative Dickinson, who has spearheaded two bills, like you could tell I'm tired, who has spearheaded two bills on the issue from the legislature's interim retirement committee, one of which the governor supports. Looming over legislator is the fund's $1.9 billion unfunded liability. It's a major issue, and it's a test of this legislative session, said House Government and Veterans Affairs Committee Chair Austin Scheuer. Representative West Fargo. It's a significant test. This problem needs to be dealt with, and if this legislator doesn't deal with it, it's shrinking its responsibilities. So again, yes, that was a quick excerpt from that article. Let me know if you guys are more interested in like more coverage of pension related news, because that's definitely something that I've started to take an interest in over the past couple years, but definitely more so in the past couple of weeks. Just kind of curious how a lot of this stuff is going to play out, because this isn't just a North Dakota issue. Just like across the country, there's just a lot of people who are either not gonna have any money in their pension, or it's not gonna be nearly as much as they think it should be, or it should be. So I'm very curious about that as well. I might make that separate videos for this channel as well. Let me know what your thoughts are in the comment section below.